I do want to talk to you about what's going on with the precious metals because, I mean, the run has already been incredible. And now we
Yes.
have this breaking of $5,000. How significant do you think that level was, and what happens now?
Well, first of all, I think the most biggest takeaway from the gold market is that it has been a very reliable mirror in that it shows all the potential cracks. And at 5,000, what it's really saying is, are those cracks going to become more like fissures, right? And so you've mentioned some of the cracks already, obviously, geopolitical situation being one. But on the other hand, we also have the silver market, right? And so essentially, that gold to silver ratio is showing yet another potential crack that many people aren't talking about, which is, are we going from the prediction of disinflation into more of a super cycle of hyperinflation? Because all of a sudden, even with all the economic growth that's projected, the demand on commodities is also going to continue to grow. So it's I don't see gold or silver going down. That doesn't mean we can't have a correction. Would I be first buying at 5,000? Probably very expensive to do so. But with predictions of 6,000, 8,000, and beyond, we don't really know. What we do know, this should be a little bit alarming to people about what's going on.
Well, and the flip side of that, and maybe the flip side of the alarm over that, is also the dollar, right? Which is going down. So are we, as we continue to see metals move up, does that definitely mean that we're going to continue to see the dollar move down?
Well, we've certainly seen the metals go up while the dollar was actually trying to consolidate and even have a little bit of a pop. So this recent downward move in the dollar is certainly another concern. We aren't at points yet where we need to start to panic about it, but now DXY just broke down under 97. And there's a lot of different reasons for why the dollar is selling off. I think the biggest concern we have to have, not only our own purchasing power and this whole inflationary potential, but also, what does it mean for our relationships geopolitically with foreign countries who may not necessarily want to support our dollar? And so I think the best way to look at all of this backdrop is we got to look at the glass half full and half empty. And the half full part, Julie, is that everything that's going on with the administration, with the deglobalization and the onshoring and the muscling that we have to get more materials into this country, plus demand that people pay us, or either that or we're going to produce in this country, could be good. But we also know that there's a lot of things that could go wrong. And that's why we're seeing the dollar fall and the metals really continue to have a lot of support. So the question is, what happens to the overall market? That's right now, I think, a little bit under question because the market is strong.
Right. And, the sort of, as all of this stuff has been unfolding really over the past year, whether it's tariff threats or the Greenland situation, most investors who are bulls say to me, earnings are fine, right? And that's really the thing that's going to matter in this market. Is that how you see it also? I mean, especially since we're going into a week that is going to be blockbuster earnings, between large cap tech and just a very busy week for earnings.
Well, I think the earnings, to me, have always been sort of backwards looking in a sense, because it's reporting what it did in the quarter before. So the question is, what happens in the following quarter? And there's going to be things that are going to affect certain earnings and things that don't affect other companies. Obviously, interest rates, that's going to be a big topic this week with the Fed, is going to be part of it. Economic statistics, consumer confidence, which comes out tomorrow. So the earnings are not necessarily, to me, what's the most important thing. It's going to be the reaction. And I think we can just start with Netflix, right? The earnings were fine, but the reaction was negative. So I think we're going to see that in some of the companies because they're going to be looking at capex and how much more money can be spent without the consumer participating in getting those companies to grow. And then I think there'll be other companies that might do well. I think of the earnings coming out this week, I'm mostly interested in Meta and Microsoft, probably somewhat technical, but also because those have not necessarily been participating in the big run that we saw as we were coming into this year, like we saw in some of the other stocks, like Google, for example. So it'll be interesting to see. But the whole tech area is not really been my major focus right now. Anyway, I mean, we own Micron because the memory's gotten hot, but my God, that thing's gone parabolic. I think we're seeing a big shift, rotation in this market right now.
And it's interesting that you talk about that, Mish, because we've seen like little kind of attempts at that rotation over the past year. This one feels more real or sustainable, right? But how will we know? Is it just a matter of waiting to see if it keeps going? Or are there other sort of technical signs that you can read underlying the market that tell you that this one is a little more here to stay?
Well, first of all, we have seen already small caps outperform this year the NASDAQ. That's a new thing. We haven't seen that before. So we have to really not only see the small caps continue to do well, but we have to see some of those other inside sectors participate in order to keep the small caps going. From an economic standpoint, we have seen durable goods just came out very positive. So we are seeing growth in the US economy. That's what these are all about, right? This rotation is showing an optimism for the economy to continue to grow. Whether that optimism remains, of course, we don't know. But at this point, the also areas we have to look at in terms of where we're rotating is something like biotech, which has been under pressure for a long time. Now, all of a sudden, all these biotech companies are starting to perk up, not all, but many. And even from our own standpoint, where we do a lot of quantitative models off of trend strength indicators, we are rotating out of some retail names and smaller tech names into more biotech names. So this is all very interesting to me. We want to see small caps, IWM stay in the game. We want to see it get back over 267 and not fail the January lows. And if that happens, then we can continue to see that rotation. But again, with all the caveats that the mirror of our dear gold is showing constantly in your mind, you have to be really vigilant this year in terms of your own investing.
Well, and I'm curious if we're talking about rotation, what does that imply for your positioning in big cap tech, right? If the rotation has been sort of out of those into some of these other groups, does that mean you're lightening the big tech you do have? Does it mean you're just kind of staying away from it right now? How are you thinking about that?
Well, we've lightened already. I mean, we came into this year with a lot of different positions. Right now, in terms of the big tech, the only ones that we're holding really is Google, Alphabet, and also Micron. I personally, from a discretionary standpoint, like I said, I'm looking more at the quantum space with Microsoft. And also, I think Meta sort of always gets underappreciated. It has a nice look to it right now. We'll see what the earnings bring. But NVIDIA, we're flat. I mean, the NVIDIA has really kind of done its job. And we saw there was big news today about CoreWeave, and that's probably why it's down a little bit. But Tesla, another one. I mean, these may all have a great future longer term. But if you're just getting in now, this to me would not be the place that's most exciting.
Interesting. All right, take a look at those biotechs maybe instead. Mish, good to see you. Thank you so much. Appreciate it.